Good afternoon. My name is Patrick Ali Harris, and I'm a first-year full-time MBA student and panel director of today's second panel discussion titled Latin America, Globalization, Growth Beyond Commodities. Latin American growth previously characterized by demands for its natural resources, for example, oil and gas, metals, and food commodities, is now also driven by the rise of other non-commoditized industries such as infrastructure, exotic agribusiness, retail, and consumer products. Our moderator and panelists will discuss how market growth is led not by Western multinationals, but by the merge of major national businesses that are increasingly expanding into other markets to become global players. They will also talk about the key factors necessary to succeed in an international environment and how the dynamic global trade landscape will affect Latin American expansion. The distinguished speakers of this panel, who are also proud Anderson alumni and who are delighted to welcome back to UCLA Anderson, are from Chile, Mr. Alejandro González, class of 2001, Chief Financial Officer of Falabella. From Brazil, Mr. Richard Lark, class of 1994, founder and managing partner of Endurance Capital Partners and board director of Gol Airlines. And from Mexico, Mr. Fernando Suarez, class of 2002, Chief Financial Officer of Volaris. The panel will be moderated by Mr. Jeff Healy, Senior Vice President of City National Bank, one of the sponsoring organizations of today's conference. Thank you.
They said my mic was going to magically turn on, and it did. That's a big relief. As was mentioned, I'm Jeff Healy from City National Bank. I have to say, after the last panel, I'm a little self-conscious sitting here with four men, but I'm not responsible for that. So as was mentioned, it's an amazing panel we have lined up for today. Alejandro González is the Chief Financial Officer of Falabella, which is the largest retailer in South America. He's been working there for 10 years. His prior experience was with the Chilean affiliate of Endesa. It's a listed company and is an affiliate of Endesa in Spain, a large utility. He is a graduate of the Anderson School of Management. Our other panelist from Mexico, as was mentioned, is Mr. Fernando Suarez Gerard, who is a founding partner of Volaris Airlines. He's responsible for financial strategy, capital raising, financing the fleet, and public listings. His prior experience includes Grupo Televisa and Salomon Brothers in New York, and he also is a graduate of the UCLA Anderson School of Business. And our third panelist is Richard Lark, who is a founder and managing partner of Endurance Capital Partners, a private equity firm based in Sao Paulo. Prior to that, he was on Gol Airlines, worked for Gol Airlines, which is a Brazilian carrier, and he currently sits on a number of senior management committees for Gol Airlines. His prior work experience includes Americanas.com, an e-commerce site in Brazil, as well as Morgan Stanley, Citigroup, and the First Boston Corporation. Mr. Lark also is a graduate of the Anderson School of Management. So I wanted to start with some questions sort of directed to each of you individually, and we'll sort of go in order, starting with Alejandro, regarding Falabella's success in South America. How have you been able to do that outside, both in Chile and outside, and in such a globally competitive industry as retail?
Hello. Yes. Okay. The first thing that I'd like to emphasize is that today customers in Latin America, they have access to products from everywhere in the world. It's a matter of cost, but myself, I am an Amazon Prime customer, and every day that I walk into my offices, I see boxes of ASOS, Zappos, and all different type of international online retailers. So the competitive environment that we face is far beyond from the brick and mortar stores like Ripley, Hernan is here, or Cencosud. Based on that, the challenge that we face is really large. Now, how have we been able to achieve the success? It's true that I've been almost 9 years with the company. When I joined, the market cap of Falabella was $7 billion. Today it's 18. And one of the reasons to do that is, on one hand, challenge every day what we do. On the other hand, and this is something that goes in line to what Professor Edwards was mentioning, benefit from the good macroeconomic situation that we have in the countries in which we run our stores, particularly Chile, but mainly in terms of growth, Peru and Colombia. And with that, I would say the final point, which is key, every time that we want to do something at Falabella, there are 3 points that we need to evaluate. First one, growth. Anything that we do, it has to bring something to the company. Second is profitability. We don't do anything that doesn't add up something to our shareholders. And third one is sustainability. And with that, I would like to go into what I think is the most relevant and most differentiated factor that we have at Falabella, which is talent and people. At Falabella, we have more than 150 MBA grad professionals from universities in the US, some from Europe. We do recruiting here. And the point I'm trying to make is that you want to do good things, you need good people. And it's important that you keep in mind that I work in the retail industry. And I've heard some other retail executives talk about customers' loyalty. Based on what I said before about this fact that the customer have access to products from everywhere in the world, the only loyalty that you have with the customer is if you have a successful transaction. If the customer goes to your site, doesn't find the product, or the delivery is not the one that the customer is expecting, which, by the way, that's the weakest link that we all have in Latin America when you talk about online business. If you don't have that, then the customer will literally go to your main customer. And in that case would be in the region, probably Ripley or Cencosud, which are the other 2 big players that we have on the brick and mortar business. But as I said before, challenge, everything that you do today doesn't necessarily have to be good for tomorrow. Travel, learn, be humble. Actually, I'm going to spend tomorrow traveling and visiting some offices of some competitors here. Don't think just because you are the #1 company that that's a sustainable issue. As I said before, customer buys today at your store, tomorrow you don't have the product, you don't have the service, it will certainly go somewhere else.
Thank you. Fernando, what do you see as the growth opportunities for Volaris in Mexico, and how has the expansion to the U.S. Been achieved? Are you planning to also to grow beyond the U.S. and Mexico and elsewhere in Latin America?
Well, thank you. By way of background, we're 9 years into having launched a low-cost carrier in Mexico, Volaris. We started operating into the U.S. about 4 years ago or so. And now the U.S.-Mexico cross-border operation for us already represents a good third of our revenues. And that's very important to be able to diversify your revenue, in particular in times where there is exchange rate volatility, like right now with emerging markets currencies being under pressure because of a strong dollar. It's very important to be able to have that diversified dollar-based revenue to offset that. So it's really paying off right now to have made the investment to reach out and go outside of Mexico and try to get into the U.S. Cross-border market and be able to grow our business, which is basically providing low fares to travel in the U.S. We currently already operate about 18 cities, into the U.S. on top of the 36 that we operate in Mexico. We're very present in California. We operate out of 7 cities in California, and we have been branching out. Texas, we now have 3 cities in Texas. Chicago, obviously an important pocket of Mexican immigration. We're basically mimicking the migration patterns that exist between Mexico and the U.S. And providing affordable air travel on a direct point-to-point basis. So the U.S. has been a very good strategy for us to continue growth of the business, although we still have opportunities to grow in Mexico domestically. But it really does provide an important leverage to be able to do that outside of Mexico. And in terms of Central America and Caribbean, our aircraft from Mexico City reaches even Lima. And all the way on the north side, we can even reach Toronto. So There are also growth opportunities. There are many routes within those regions that we think we can come in, drop prices, stimulate demand, and provide a much more affordable air travel. So that's also in the works. Right now we're focusing on the US. We really put routes to compete against each other. We bring the aircraft and we sit down with our planning guys and figure out which routes make more sense on a profitability basis. Turns out to be that most of them have been first in the Mexico domestic and then cross-border to the US, but we do have some candidates to potentially start servicing parts of Central and South America. It's only a matter of time that we deploy. We can only grow so fast. It's a company that since inception has been growing double-digit rates, but eventually we'll get there.
As I didn't warn you that I was going to ask you this, but it just occurred to me, is there any thoughts with the U.S. opening to Cuba to establish service to Cuba? I remember when I lived in Mexico City, it was always startling at the Mexico City airport to see that you could fly to Havana from Mexico City. Is there any thought to that?
Some travel happens through Mexico from the U.S., although now you can fly with less restrictions from the U.S. We're not concerned as much about the opening of Cuba to U.S. travel. In our opinion, it really will take several years for Cuba to really establish the infrastructure, in particular tourism infrastructure, to be able to absorb or to welcome a growth of the tourism industry as you have a tourism industry in Mexico or other parts of Latin America. You really need to spend a lot of time in training, customer service, and so forth. So I'm sure they'll eventually get there, but it's still some years distant. So we're less concerned about that.
Thanks. And Richard, a question for you. In terms of international capital flows, how have you seen that change in Latin America over the last few years, and what's your view, say, for the next 3 to 5 years?
Yeah, well, I think I'll respond to that with respect to Brazil, which is my area of focus and expertise. I'm still trying to figure out which 3 countries Dr. Edwards excluded from the Latin American continent. So, but I think on the Latin America level, it's over 200 billion a year that we're expecting. But in Brazil, what we really saw was a big change when Brazil achieved investment grade status back in 2008. Prior to that, we were at about 20 billion a year of foreign direct investment. And since Brazil has now fallen back into, some Brazilian companies have fallen back into junk status, particularly Petrobras. But when Brazil achieved investment grade in 2008, we went to about 60 billion a year. And I would echo what Ambassador Ayaldi said, that we're expecting in the next couple of years around 65 billion a year, which are the recent projections from Minister Levy. And that's basically what's closing the current account deficit. I think in terms of where that money has been going, probably the only significant change recently going forward is probably a heavier focus. The biggest delta is more on infrastructure and construction, but continues to be focused on energy, consumer manufacturing, real estate, and other things similar. Of course, my comments are respect to Brazil.
Okay, so I'm going to toss some questions out, just to, that maybe you can each take a stab at. One would be the role that entrepreneurship plays. We heard a lot about entrepreneurship in the last panel as well, and how can innovation and entrepreneurship be supported in Latin America? Do you want to start, Alejandro?
Sure, absolutely. I think it's, I don't want to say a big role, but I would say maybe the role. It's true that from a macro perspective, Latin America today, or the countries in Latin America are placed in a better position than 10 years ago. But through this, we're still a small region. And today you can see several examples in different industries, not only in the retail industry. For example, we can go to the financial institution industry. Today you have a Peruvian bank, BCP, that has a level of professionalism and a level of technical practice that 10 years ago was really hard to find in Peru. 10 years ago, you would like to do something in Peru, you would probably hire JP Morgan, Morgan Stanley. And today, the team you can find in there is very professional, very knowledgeable, 100% of the guys with studies in the US. Same thing happens, at least from what I face working with the different subsidiaries that Falabella has in Colombia. The level of professionalism, the technical level that you have in BTG in Brazil, Itaú in Brazil, are things that you didn't find before. And those are because you had entrepreneurs that were willing to do something different. Now taking it back to the retail industry, Falabella has a business model that you cannot find here in the US. There's not a single retailer in the US that has, if you deaggregate 100% of the EBITDA, 40% is retail, 30% is financial services, and the other 30% is real estate. Those are things that usually when I have a discussion with the rating agencies or with financial or shareholders of the company, they keep telling me, hey, why don't you sell the bank? Why don't you sell the real estate? Why don't you establish a REIT and take it off balance? The truth is, we found a way to do something different and create value and generate synergies among these three divisions, always related to retail, because I don't make apartments to sell. I build boxes or shopping malls to put my stores. It's true that I lend money, but I promote the use of the money I lend so that people can buy the products in my stores. Those are things that you need to create and you need to do. And in the particular case of Falabella also, it's true that we are a Chilean company in a way of saying shareholders, 80% of the shares are in the hands of Chilean people. But at the end of the day, as I said before, 40% of our sales come outside of Chile. And that's something that, I don't know, when I joined the company, that number was 20%, now it's 40. It's very obvious that down the road, we'll get soon to a 50%, and the percent of sales of Chile will go that number. So you need to be open-minded. And then again, we go back to the entrepreneurship. And in the case of my company, the CEO of every company, he runs the company as if he's the owner of the company. He gets paid on the performance of the company. And those are things that you need to relate. And there's no way you're going to be growing in the different companies unless you relate that. And when I say he's paid based on that, I mean it. I say every year, this is the amount of equity that you have. This is the equity of the company. And I evaluate the CEO of each of the subsidiaries of the company as if I was the shareholder of it.
Thank you. Well, it's interesting because Fernando and Richard, you both participated in startup companies, and so that's very inspiring in terms of entrepreneurship. Can you sort of comment on what you see the role of entrepreneurship being in Mexico and in the markets that you operate in?
Oh, of course. I believe entrepreneurship is key to be able to really develop long-term economic growth in a country like Mexico. And entrepreneurship at all levels, not just small mom-and-pop shops or medium-sized enterprises, even at larger levels as well. Mexico, despite its track record of reforms, the more recent ones being implemented as we speak in terms of energy and more liberalization on telecom, certain industries within Mexico remain very concentrated. Cement, beer, telecom. Financial services have gradually been flexed more and more. So it's really challenging to have the entrepreneurial push in a country like Mexico where you still have very concentrated industries. But we have good examples on how to do it. In particular, in the case of Volaris, we entered an industry that was oligopoly, dominated by two carriers, Aeroméxico and Mexicana, which were part of the same holding company back then. And there were more than 13 carriers back then. So it has really been a story of having a good entrepreneurial management team with the right incentives aligned with shareholders, as Alejandro was mentioning, to really be able to propose a business plan, not be fearful of entering in a hyper-competed market and really be able to execute accordingly. So a little bit of a story as now in hindsight, 9 years into the business, I call it a story of David versus Goliath. In many industries, the entrepreneurs come in as Davids, and you should not be afraid to compete against giants or Goliaths. So it really is key to have the entrepreneurial spirit at all levels, even in large regulated industries or hyper-competitive as they may seem, to be able to take the corresponding risks and be able to grow the business accordingly.
One quick question. They mentioned briefly all the aviation sort of entrepreneurship and engineering coming from the Querétaro area. Does that have? Are you seeing any of that working for an airline? Is there any overlap between that activity in the Querétaro area and your business?
Oh, absolutely. We've seen the aerospace clusters not only in Querétaro but also mushrooming in Chihuahua and Monterrey. All of the supply chain that our vendors have and have been developing locally. It's a combination of not just the big firms in aerospace, Bombardier or Safran or GE building engines or parts or so forth. But there's an important piece of smaller vendors within the supply chain that is mushrooming there, and that is developing very nicely. So that there are also some very good entrepreneurial opportunities there, and we're happy to hear that they are developing accordingly.
I would say in Brazil, entrepreneurship is, and the role of that is very difficult. I think different than Chile, which is, I think, a very different environment, almost maybe a different planet when you talk about entrepreneurship, and probably in Mexico as well. In Brazil, we have very high capital costs, very scarce skilled labor. Startup costs for a business are very high, and a lot of government involvement, which supports existing players. Weak firms stay afloat and stifles innovation. I think as a result of that, we've seen a lot of innovation or entrepreneurship or small companies that have become large successful companies in things like retail and finance and maybe to some extent airlines. GOL, as an example, did not have a lot of support from the government. The government basically had a new regulatory environment which stimulated a lot of competition. Prior to GOL, 3 of the companies, the airlines that existed prior to GOL, went bankrupt within the first 3 years of GOL operating. And so I think innovation, if you will, or what has been a tripling of the size of the airline market in Brazil had to do with, was supported by less government involvement, for whatever reasons. Brazilian banking is one of the most automated in the world for a lot of reasons. And in retail, for example, there's an interesting, we have a company in Brazil called Arezzo, which is a women's shoe manufacturer that literally creates 1,000 new models each month, of which 200 make it to its shops. And so in Brazil, it's interesting, I think on the previous panel, there was some talk of the government having to have a role in stimulating entrepreneurship. I think in Brazil, if you look at the sectors where real entrepreneurship has happened, with major changes in businesses, it's been sectors where the government has not been that involved or knows its proper role. I mean, Embraer was cited also as an example of innovation, where the government had a very specific role in that.
Well, thank you, because you sort of segued to my next question, and then maybe we'll throw it open to the floor. But just how maybe if you can cite a successful model of economic planning by a government or not, or how the regulatory framework can either help or hinder, what your experience has been of helping or hindering growth in entrepreneurship. Sure.
Yeah, sure. Among the countries in which we run our investments, I think Peru is an example that really excels in terms of being very positive for for new investments in particularly. I don't know if you're aware, but if you're a big company and you want to buy your closest competitor, in most of countries that would present a problem. In Peru, there's a specific entity, which basically depends from the Ministry of Economy, which basically starts following if you start moving not only your prices that you charge to the consumer, but also the prices that you pay to your suppliers. And that's a way in which you can create, I would say, a system mechanism in which you can protect antitrust behavior. And why I mention this, because we're talking about an economy in which formal trade doesn't go up 30%. So it's totally different to what you can imagine. And when I say informal is more than 70%, I'm not talking about flea markets or small markets. I'm talking about big structured markets that are downtown. Everyone knows where they are. So economy is very informal. And this is a way the Peruvian basically regulator has found in which to attract, I would say, formal retailers like Falabella, like Ripley, like some other players that are trying to enter Peru in these days. And the other thing, for example, if you're an institutional investor, today in Chile, to buy a share, you need to fill out several forms, and the instrument has to be approved by the pension fund agency. That implies that whenever you're actually in a roadshow to sell something, you cannot go to the market at least for 15 days. And those who are participants in the financial markets know that 15 days can represent a lot. In the case of Peru, it works in a different way. Basically, the pension fund, they need to follow out, but they can buy whatever they want, and there's a part in the agency fund who has previously basically set a standard limit, and they only need to comply, but they don't need to go every time that you want to sell or that you want to buy a different instrument to ask for permission to the bank agent. So basically, they cut up the bureaucracy, to put it in simple terms, and it makes the market more agile in terms of market timing, which we all know can be very relevant.
Fernando, I assume it's a highly regulated industry in Mexico. What's your experience of how the government can promote entrepreneurship?
Well, yes, regulation is key in order to have the proper incentives and the rules of the game well set to be able to have any successful business in any industry. Right now, Mexico is in the spotlight of certain changes to regulation. In particular, there have been some enhancements done to the antitrust agency in Mexico. And we now see an antitrust agency much more active, in particular looking into telecom. With the telecom reform, there's a lot of eyes watching on how that is going to play going forward. So it's really important that the Mexican authorities, with the proper regulatory framework now, do deliver in executing according to that framework. So I guess, yes, obviously aviation is a very regulated industry, and we've seen improvements to the framework there. But other industries right now, in particular telecom, because of the size it represents of the GDP, it's going to be very interesting to be watching what's going to develop there. And now energy going forward, electricity, oil, and so forth, to understand what the framework is going to be there in light of opening up to foreign capital right now with the energy reform. So we're really watchful waiting to see how that new or these enhancements to the existing regulation play out.
Thanks. So why don't I have lots more questions, but maybe we can take some from the audience. We have like 15 minutes or so left, so I don't want to.
Are you guys thinking about the social responsibility to each of the countries? And if it is, what are you doing about that in order to decrease the disparity of income that exists in Latin America?
Those are big questions. And we have less than 15 minutes to go. Who wants to, any volunteers to dive in first?
We've now gone back 10 years where we have to defend the country stories all over again. Well, I think quickly on your Brazil, we don't have a small economic problem. Brazil, we have a big economic problem. 0% growth, high inflation. But I think the quick answer to your, we kind of feel like we're at an investor conference here now. But I think the Petrobras situation is wound up being a big positive. For one of the issues mentioned in the previous panel, which is the strengthening of rule of law in Brazil. I can't speak for other countries or neighboring countries, but and part of the reason is the U.S. government had a role in that, so it would be very difficult to sweep under the rug. And I would say the optimism right now on the Brazilian side is going to be a very large house cleaning exercise, which will strengthen a lot of the mechanisms for dealing with those kind of corruption issues in Brazil. Obviously, Petrobras specifically, you could get into talking about the government as a shareholder and how that had been used as a social mechanism also, with fuel prices and otherwise. But I think net, it's going to be very, very difficult short term economically and for investors in Petrobras. But no pain, no gain. We expect some very positive changes for that, regardless of the political situation. I think part of it is also the international community's role in that, and international investors' role in that.
Fernando, do you want to take? I mean, that was mostly a political question about Mr. Peña Nieto. Do you want to take a run at that, or?
Sure. In terms of politics, my own personal opinion is that with the political uncertainty and insecurity in Mexico, it does drag economic growth. It's hard to put a number on it, on how much these two factors are hindering economic growth in Mexico. But what we can say is that clearly Mexico is well below its full potential of GDP growth. The Mexican economy only grew 1.1% in 2013, 2% in last year in 2014. It's the sixth time that they revised downwards the Mexican GDP forecast for Mexico in 2015, closer to 3%. So part of it is structural problems of the Mexican economy and the decline in oil price, although Mexico is now much less commoditized than maybe 10 or 20 years ago. But yes, the answer is yes. There is an overhang of politics that is retaining the full-blown growth potential of Mexico, and it's very hard to deal with it.
Okay, Alejandro, the gentleman had a very specific question for you. Are you ready to take that on?
Yeah, no politics for me. Thank you. You mentioned some numbers that are not quite accurate, so let me please correct you on that one. You said that we had investment for $52 billion, and we put $6 billion in Peru. Just to state one thing, as of today, the market cap of the company is roughly speaking $18 billion. I wish it was 52. And the amount, Peru, roughly speaking, represents between 20 to 25% of Falabella, depending on any metrics that you would like to see. So it could be in the range of 4 and something. But going to the, I would say, to the real question you're making, why we're putting more money outside of Chile than out of the other countries, it's a matter of opportunity. Falabella has benefited from a first mover's advantage from a relative perspective. I already mentioned that the formal trade in Peru is only 30%, and that's the number in Lima. If you go outside of Lima, Chiclayo, Trujillo, most of the cases, we were the first store in those cities. And we're talking about Peru is a country, roughly speaking, 2 times the population of Chile, a little less than that, but roughly speaking, and half the GDP. So there should be no reason why, if I'm efficient, I could not have a scale similar to the one that I have in Chile. It's true, and also I'm basing my argument on the fact that Peru has grown in the last 10 years a lot more than Chile. And if we go to Colombia, even though the level of formal trade is higher to the one that you can find in Peru, it's still in the level of 40, 45, 50. And depending on the different formats that you have, Falabella has department stores, home improvement, and supermarkets. You see that there are not that many international players. In the food market, there are more, but department stores, basic speaking, you have Falabella, you have Ripley. Home improvement, we are by far the leaders on the market. And the minute we stop investing in those countries is when you open the gate for some other competitors. We have a strong position, and if you think from a relative perspective on the return that I can make in Peru and Colombia, it's better to the one that I can have in Chile. But that doesn't imply that I'm not investing in Chile. The thing is that when I need to allocate capital, which is, even though this is a large company, capital is always limited, we find a better way to use it in Peru and Colombia.
Thank you. Another question?
Thank you for your insights. Moises Cisneros, Ignite Movements. We are economic development consultants. So LA last year became the third largest tech hub in the world, replacing New York. Just was wondering if you had any take on tech hubs in Latin America that are impressive or that you find promising in terms of being an economic driver in the area.
Like we just talked, we mentioned a couple of times now, Querétaro is like a hub for aviation, innovation, and engineering. Is there a Silicon Valley or a Silicon Beach that's somewhere south of here?
Maybe this is the answer, right? Maybe that's part of the problem. I think on a U.S. comparison, if you're from the States, no, it's not in Brazil. We don't have that would be on that par. You have some areas of development where perhaps you've got ecosystems that are perhaps copying things for adaptation to the Brazilian market and exploring the Brazilian market, but nothing I think on a par with what you're talking about, which is a real cauldron of development of new products that would then be scalable on outside of Latin America. There's niche places, but I think none worth really mentioning, at least from my perspective.
I know in the case of both Brazil and Argentina, there have been government programs to try and create more investment in the tech industry. In the case of Argentina, for instance, the mobile phone manufacturers, if you want to say, I'm not going to state this accurately, and I'm sure there are Argentinians here who will rush to correct me, but like Samsung, if you want to sell a Samsung mobile device in Argentina, there has to be a certain component of Argentine content in that device. There's like zones where that happens. So there are, just from my little seat in downtown LA, I know there's pockets that are being promoted by the government. And either you two have sorry. Give my best. Another question. Please.
I think it's probably both. I think, and perhaps things change going forward. I think up until now, what I've certainly sensed was that, Brazil has always seen the opportunity more outside of South America, if you will, as opposed to, in South America in terms of focus and so on. As you know, you're from Argentina, right? Yes. Not a whole lot of focus with Brazil, with Argentina in that respect. Beyond agriculture and some other aspects. Perhaps the cultural aspects go in there as well. But you take Embraer, which has been mentioned here. Where Embraer focused on its big project was China, and in recent times. And so there's been a big focus with Brazil in recent times on China. In terms of energy, in terms of trade and agreements and so on. And I think going forward, the same non-South America or non-Latin America focus is going to exist, and I think that's going to shift to the U.S. More so, for better or for worse. That's one of the things when you look at the Latin America region in terms of trade and so on, we really don't have a leader like you had with the U.S. and NAFTA or Germany and the EU. A lot of people say Brazil should take that role, but I personally don't see anything other than lip service on potentially assuming that role, or even if it would make sense. So we do have you have various groups within Latin America that have tied together 3, 4, 5 countries, but none of which are really have become powerful on a regional scale to, more assert Latin America's place on the global map.
Listen, we do have an investment. Last year, 2013, we acquired a home improvement company. Actually, we acquired 50.1% of the company. Sells, roughly speaking, $450 million. It's a home improvement company. Relatively small for the scale of the rest of the company. But there's one thing that you cannot deny. Brazil is a huge economy. If you want to grow in Latin America, sooner than later, you will have to go to Brazil. Why we went on this alternative, it's because the home improvement industry is very fragmented. If you take the top 5 players, we being the 5th one, you don't get to 10% of market share. It's very, and it's non-regulated. Usually, in Chile at least, there are lots of examples of companies that have gone to Brazil and failed. And in most of the cases, when you talk to the people who have been there, and I was a board member in a Brazilian company in my previous job, it's because you fail to understand the way the Brazilian economy works. And that's something that, I don't know if I mentioned this, but whenever you want to invest in a different country, it's important you understand regulation is different. The language, even though a lot of people here think that's similar, it's different. When you want to sign a contract in Portuguese, one thing is go to a restaurant and ask, I don't know, for a beer or food or something. For social gathering, yeah, you can work with Spanish, Portuñol. But when you want to work and sign a contract, it's a different story. So that's why we started small. But you want to keep growing. For us, it's more natural to grow in Brazil than to start buying companies, for example, in Europe, which may eventually have something different to say. We are facing a tough environment. I guess it's nothing new that Brazil is facing some challenges. But being a relatively small company in a fragmented industry, everything in the state of Sao Paulo, that's another thing. You need to be very careful in what region you go if you're going to start at least a retail business. So far we're getting the results we were expecting, but it's an ongoing concern.
Other one? Please.
Yes, thank you for the presentation. I wanted to ask the following. Given the strength of the dollar and the valuations in Brazil in particular and other Latin American countries are coming more in line, so there may be more capital flowing into Latin America in terms of directed towards acquisitions or mergers. But at the same time, the risk factor seems to be going up, and one thing may be balancing the other. And then, do you see any potential for such acquisitions or mergers in industry and manufacturing to go back to, say, the range of exporting or the success that Latin America had in exporting manufactured goods in up to 2000? In 2000, we moved mainly back to commodities and primary goods. So given those two things, is there an possible attraction to acquire a manufacturing company that might be export-oriented?
Yeah, I would say all of the above. I mean, perhaps the silver lining in the exchange rate is that I think we are going to see change of ownership of Brazilian companies because many foreign companies have been for a long time looking at acquiring Brazil, and perhaps we've been moving slowly because of the exchange rate, because of getting that risk out of the system and so on. And I think even recently, there's many examples where these players have now pounced on opportunities because what was good at 2 reais is much more interesting at 3 reais. And I don't think the risk component is that big of a concern because Brazil, from a financial perspective, is as healthy as it's ever been. Just as an example, almost $400 billion of currency reserves. You go back 10 years ago, that was 25 billion, which is now a rounding error in that amount. So there's a whole bunch of reasons I think that's much less of an issue. I think you are going to see change of ownership. And part of the theme of this conference, when we were asked to focus, was the non-commodity globalization element. But I agree with you. I mean, Brazil 1/3 of Brazil's trade is commodity based, and it's obviously there's a short-term component here, which can be very dangerous depending on how that goes. But yes, that's going to leaving aside the China component. That's why I think the U.S. will come back more into the personal interest of Brazilian policy. But yes, I think the commodity, agriculture specifically, and natural resources will continue to drive a lot Brazil wealth creation for sure.
Yeah, to support what Richard was mentioning, real example that we have. We sell in our stores our international labels, and we have our private labels. Most of them are sourced in China, particularly apparel and some deco products. Today, we're finding that some of the apparel products, it's cheaper to produce them in Peru and Colombia. Colombia, for those of you who are not aware, has very good jeans, and cotton products in Peru, very good quality. So we're getting a feeling to changing part of the products that we were originally thinking of sourcing them from Asia. Now we're going in a small portion as we speak, but that's something I don't know if the soil goes, I say 3.5, 4, yeah, sure. At that point, it would be a lot more profitable to source them internally.
In the case of Mexico, the manufacturing sector has experienced an increased boom in recent years. Now it turns out to be that producing in Mexico might be more competitive than to outsource in China certain products. So, for example, the auto industry, among other industries, have clearly been seeing that. Aerospace, we mentioned earlier, the cluster in Querétaro, that's a fine example as well. But it's not just relying on the traditional manufacturing and just betting your competitive advantage on purely exchange rate or geography. You really need to improve many things, in particular worker productivity in Mexico. It has been improving. It has become much more competitive than say 10 years ago. It competes much better against China for investments from the US. And that's also very important. What's the next challenge for Mexican manufacturing to continue to take a larger share of the manufacturing export into the US? Also has to do with energy costs. It's very expensive, electricity and gas for the manufacturing as an input of manufacturing. So that's why it's also key that the new energy reform does provide the right framework, the right investment, and does generate the sufficient productivity in the whole supply chain and in manufacturing to have lower unit costs to be able to compete much better and not just rely on either exchange rate that might be there or not. The Mexican peso can easily appreciate back again, and there goes your competitive advantage. Or just geography. Turns out to be that now with oil at half the price where it is, it might be cheaper to truck or rail over products to the US from Mexico than to ship them from Asia. So you cannot rely on those temporary advantages, and you really need to invest in improving the productivity of the Mexican manufacturing, as well as engineering, and just growing out of just pure basic manufacturing to more value-added products and engineering. That is what really will be able to give you a long-term competitive advantage.
Do we have time for one more? Okay. Any ladies? After the last panel, I feel like, come on, no? You're not a girl. But go right ahead, please. Sorry. I tried. Good.
Actually, I'm in Chile, Peru, and Colombia. Chile and Peru are certainly one of the most frequent issuers that you can find in the market. When you're the CFO of the company, you can run the debt side of the market. You can do whatever you want. In terms of the equity part, and this is a real discussion that I have with the 80% of the shares of my company that sit and represent the board that I meet once a month. So it's whenever I have, at least the way that we handle the thing at Falabella is that we have a certain ratio. They have a certain level of debt that they would like to follow. And historically, we've been under that. The minute we go through, and for those who you are not aware, the shareholders of the Falabella are relatively conservative families, 7 families, and they have a lot of other businesses. So eventually, if we had the need to do that, we wouldn't actually, if you see out of the 20% of free float that the company has, when I joined the company, international investors were close to 5%. Now it's between 12 and 13. So I guess the market would be over there, but usually you don't have the decision whether you would like to. And if you have a good investment, they know that they need to support the company.
Yeah, in the case of Volaris, we started out 9 years ago with private equity, an investment of $198 million. And then, in order to get aircraft, we only did sale leasebacks and operating leases. So in that sense, we've been having that leverage since inception. We managed to go public about 1.5 years ago. So for us, the order of the factors has been important. To put the public equity piece first before issuing any public debt, for us, it was very important as well. So it really depends on capital structure and what stage of the company you're at. Now we have access to the public equity. Eventually, we could issue, starting with local debt, local publicly traded debt in the Mexican Bolsa. There has been a boom in the last 10 years of Mexican companies being able to access peso-denominated financing, which is also very important, and not just to rely on high-yield US dollar-denominated financing. So that's a marketplace that eventually we'll be exploring. But what's important in your capital structure decisions is to have the different options and to be able to have access to long-term public capital markets financing to be able to secure the growth of your company.
I think this shows the difference between Chile and Mexico and a place like Brazil. And Brazil, you know, the debt equity question in Brazil is very different. I mean, most companies in Brazil do not have access to long-term debt and do not have access to public debt. You know, it's a very small number of companies that do. And so, you know, it's more a question of, it's not really a debt equity question. It's more a question of, you always will generally have access to very expensive bank debt. But what you're talking about in terms of capital structure and so on, it's pretty much on or off, meaning for the larger Brazilian companies also is basically always be ready, and when you can raise long-term capital, be it equity or debt in Brazil, raise as much of it as you can, and then I mean it has been a very different environment, except for the very, very largest companies. I think it's a different dynamic. That was really the question: how you manage the debt equity. But I think Chile has for a very long period of time been an investment-grade country where generally the market is open, and so they're probably less worried.
Yeah, the
worried
market's
about
really open.
not having the market open, and probably Mexico to some point as well. Which goes a little bit to the regional differences. I mean, if we were talking about Argentina, we'd have a very different conversation also.
And
So it's very different. Yeah.
Just a final point: interest rates today, regardless of the level of inflation you may think of, historic minimum levels. So that is really cheap in Chile, Peru, Colombia, and it's available, at least for a company like us.
I think that's it for time. So Alejandro, Fernando, and Richard, thank you very much. I hope everybody enjoyed it.